As we expected, January was a challenging month for global financial markets. US equity markets fell around 5%, European markets followed a similar pattern, finishing down around 4%. UK markets were broadly flat. Tech-heavy indices have been hit the hardest. Why? Because high valuation stocks have seen profits taken over the month. So what has really impacted the market through January? Well, firstly, escalating political tensions in the Ukraine have placed further strain not just on Europe, but the wider global market. Secondly, it's the ongoing theme of rising energy prices, and of course that feeds into the current direction of inflation. The energy sector was the best performing in the month, up over 19%. Turning to factor performance, value was the best performer over the month, with growth and then small cap the hardest hit. So turning back to the global economy, central banks remain in focus, and attention is shifting to the monetary policy expectations, which is placing strain on both growth but also defensive assets. The Fed chairman has indicated that a first rate rise is very likely in March, and he's refused to rule out any further changes. So what does higher interest rates really mean in the real world? Well, higher rates reduce the value that investors place on future corporate earnings, and this hits the higher growth company valuations. And that's why we saw the technology stocks fall in value through January. Of course, it also places pressure on defensive assets and the fixed interest markets, and it diminishes the attractiveness of bonds. So turning to those defensive assets, European government bonds and US Treasuries were pretty muted over the month, whilst global investment-grade corporate bonds also struggled. Well, why? That threat of rising inflation and interest rates. So in summary, what should investors expect in the coming weeks and months from financial markets? Well, firstly, the prospect of higher inflation. Secondly, prospect of higher interest rates. And thirdly, the prospect of more global equity market volatility. These are the themes that appear to be here to stay for the near future.